Good morning, this is Robin Bieber on ChartTalk on the 2nd of July at 6:55 in the morning London time. The contracts all performed a perfect springboard move yesterday, which is where they move over their short-term moving averages and springboard north to initial resistance. It is almost the definition of range trading. Just look at the way the short-term moving averages, the red, the blue and the green lines, act in this uptrend. They're perfect trend following support, and for many is where the buying zone comes in. Now they are absolutely critical and important support in an uptrend, but when a market starts to go sideways, logically the short-term moving averages all congest, as you can see here on August WTI. They're virtually all at the same point. When that occurs, the market, when it breaks out above them, rallies to initial resistance and falters. Equally, we get trapdoor moves when the market moves below them, like we saw on Monday, and RBOB headed straight for its 34-day moving average. So they act as springboards to resistance, trapdoors to support in a range. We are in a range. So yesterday, when we breached the short-term moving averages to push higher, our initial targets were the range resistances, but no more. People betting on breakouts and uptrends may yet be proven right, but it's too early. We're still in a range, and the contracts will only be moving back into an uptrend if we start to move and close over these key range resistances. So let's look at the contracts. August WTI. Here's the short-term moving averages, which are holding beautifully. Yesterday, over them, and the day before we were just below the 8, but overnight yesterday morning, this time, we breached to the upside the short-term moving averages and acquired a target to 40.69. We got to 40.58 before we faltered, pulled back and held the short-term moving averages. The odds are it will have another go at 40.69. If we move over 40.69, it's a tentative breakout where we will probably test 41.0520. A move and close over 41.20 gives it upside to 42.17. The bottom line is, whilst above the short-term moving averages, we're in resistance testing mode, but not in an uptrend, or back in an uptrend yet. As long as we don't close below the 21-day moving average on TI at 38.71, this upside potential is maintained. A breach of 38.71 on the 21-day would show that we're about to go into a trapdoor move lower. Brent is exactly the same. It hit its target at 42.45 yesterday and fell back. It's above the short-term moving averages. It looks like it's going to retest 42.45 this morning, and a move and close over there, or just a move over there, sustained move over there, would give us a target to 43.48. This contract is in perfect condition whilst it stays over the 41.23.11 area, this turquoise line, the 21-day moving average. So we're going in for another springboard move to 42.45. Heating oil is never quite got up to its springboard target at 122.59. It had a high at 122.13. It still looks like it's going to test 122.59 whilst it stays above the short-term moving averages. It must not move and close below the 21-day at 117.78, or we're in for a trapdoor move south. Now, RBOB is incredibly important because it's giving early warning signals. Now, watch this point here. This is the 13-day moving average. That comes in today around 122.56. If we move over there, and we're not very far away, that will spur the rally to the springboard targets on the rest and range resistances, and likely have RBOB heading up towards 123.48. If it moves and closes over 123.48, it gets further upside to 125.71, and the further upside credibility is enhanced. So the initial pivot is RBOB's 13-day moving average at 122.56. Over there, and we're spurring a rally. It must not move and close below the 5-day around 119.60. If it does, we're in for a trapdoor move down, quite a big one, down to the 34-day at 115.58. So the 5-day at 119.60 is critical support, trapdoor support if you like, and the 122.56 13-day moving average is important initial resistance over there, and we are likely to get a rally across the board. Gas oil. Still looks like it's heading on the left-hand chart to 369.0025, the correction point. It's okay whilst it's above the short-term moving average. Limited downside here at the moment. Its stochastic has just moved positive. So the key is what happens at the range resistances, which look like being retested off a springboard move from the short-term moving averages. There's no serious upside yet until we move and close over those key resistances which we've identified. Now, if we just look at a bit of back-end structure, deck red deck pushing higher, looks safe. It should make its way to minus 50.46, this area here, and the deck red deck on Brent, same thing, it's over the 8-day moving average, and whilst over minus 220 should make its way to minus 152. Now the initial action, if we look at the 60-minute chart on SEP Brent, it's in the middle of the action. There's no real strong clue as to what the next few hours hold, but I would suspect we're going into resistance testing mode up to 42.45. And in the RBOB, beginning to get a little bit toppy, a bit thin, so no clear direction. That's all for today, folks. Good luck, good trading, and bon appetit.